What do you think?
Whoa. Very nice.
It's very cool, Bateman, but that's nothing. What do you think?
Nice.
But wait, you ain't seen nothing yet. White.
Impressive. Very nice. Let's see Paul Allen's. Look at that coloring. The tasteful thickness of it. Oh my God.
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a glorious day today. Now, while the S&P has put in quite a boring daily candle, if we do switch it to the weekly, it does appear that we've had some nice recovery. Now, on the flip side, Bitcoin is actually falling out of our blue zone and does look like it's kind of hanging on by a thread. So, are we expecting a big Bitcoin pump, or do we actually need to visit some of those lower levels, like $40,000? Do we need to consolidate? Well, we have gone over so much lately when it comes to the Bitcoin price action, so much with the long-term charts, the short-term charts. But in today's video, what I want to talk about is the fact that all of the Bitcoin models, every single one, the rainbow chart, the stock to flow, even looking at the Fibonacci's, could absolutely be shattered, because we know that there is a massive shift happening right now in Bitcoin and cryptocurrencies. I talked about it in yesterday's video, specifically discussing how Ethereum has actually broken out of its Ethereum to Bitcoin pair, and it's looking much healthier than Bitcoin overall. But there is something right now that is happening. There is an untapped market for Bitcoin and cryptocurrencies that could literally send the price per Bitcoin, actual Bitcoin price, over $600,000. And like I said, it could absolutely shatter all of the models, breaking even the most optimistic of optimistic price targets. And not only that, there's something even bigger. We're going to go over that in today's video, what that is specifically, because if this happens, which I do believe it's actually happening right now, we could see crypto explode to levels we have never previously seen. So if you are doubting Bitcoin, if you are doubting cryptocurrencies, if you are panicking or freaking out right now, you're going to want to stick around to the end of this video. Make sure you watch everything, and I guarantee you're going to walk away with a much more bullish outlook. So if that sounds good to you, you know what to do. If you are not subscribed, definitely consider it. And without further ado, let's hop directly into this not really too great looking short-term Bitcoin chart, but as I have said, guys, you know, we are looking to build that foundation. We're looking to build that support. I don't want to be a broken record on this channel. Please watch my video from yesterday, and specifically watch my video where I talk about the long-term Bitcoin outlook, okay? So go back and watch that, but for short-term purposes, it doesn't look particularly great, guys. As I said, we've been held by this legacy resistance. The bottom of this is also acting as resistance. We also have this very, very critical red level where we had this support right here that I showed you yesterday. Yes, it did, in fact, kind of as we thought it would, act as resistance, and we are currently pushing below. So if we were to fall down, the next level of support for Bitcoin is roughly around the $45,700 level right here, where we actually meet with this legacy spider line that we had put in right here, right? It had acted as support during this consolidation as well as resistance before the massive breakout. So as I said, guys, there is unfortunately a little bit more downside targets than there are upside targets right now. Bitcoin really needs to prove itself. I have spoken about this ascending, broadening channel right here. We've talked about how it's typically a bearish channel, and it does look to reclaim the bottom of where that channel started forming, which is down here. And yeah, if we do fall down to that level, obviously that puts us down around $30,000. Now, I did say that that was my worst case target for Bitcoin. I'm still very optimistic that the $40,000 level holds. You can actually have a look over here and see, in my opinion, the most important line out of all these lines on the chart right here, of course there's multiple levels, is really this green trend right here. It's a spider line that started right here when Bitcoin peaked at around $42,000 on January 8th. You could see we did in fact have that resistance, massive pullback up here, acted as resistance again. right? Resistance again before breaking out. It did act as support, and it acted perfectly as support right here. And once again, not to be a broken record, but this is what we're looking at. This is what Bitcoin needs to hold above. So short-term price target, if Bitcoin does continue falling down, is going to be around 47,000. And if that level gets broken, sort of the last stand is once again between that $42,000 and $40,000 level. Anything below that, and we are losing this purple trend right here, which would confirm that we are coming back down to the bottom, and then that would literally have the prophecy of this ascending, broadening channel come true, right? So sounds pretty bearish, right? Sounds pretty bearish as far as I'm starting this video off. Well, I mean, look, if we have a look right here, you know, there are lots of opportunities for trading. If you are looking to trade these levels, you could see that once any of these key levels gets broken, Bitcoin often does move to the next support or resistance. Now, the no man's land that we're trading in right here, you could see right in this area between this and this, these two red lines, is kind of where we're at right now, which is why I said to become like incredibly bullish on the short-term price action, we would need to see Bitcoin, you know, even if we came down here, bounce around, but ultimately you want to get back above this sort of $55,000 level, right? You want to break back above this big area of consolidation and then continue to the upside. On the flip side, you really don't want to see Bitcoin fall below this red zone, right? Because the last line of support that we have right here is around that $40,000 level. If we lose that level, well, then most likely Bitcoin is going to absolutely plummet down to the 30K range, right? So you can trade these. I mean, you know, you can profit. I mean, traders are loving it right now, right? They love that volatility bouncing between all these levels. If you are interested in learning how to trade, I highly, highly recommend before you start that you watch one of my tutorials. I have 3 different tutorials for 3 different platforms. Take a pick, have a look, try it out on the testnet. There is over $8,000 in bonuses. Use the links below if you want to get that, and obviously beware of scammers. Make sure that the comment does have the official check mark so that you know it's from me. But I don't want to focus too much on price today. We've been focusing on price. The reality is there's not much happening right now with the price. We're in no man's land. We're consolidating. And what we are looking to do is either break above one of those critical levels like the $55,000 level or break below the 42 to 40K kind of, you know, zone and then go down to 30. But right now we're just bouncing around in the middle and we're trying to figure out where we're going to build support. So that's why I don't really want to focus on it too much. But what I do want to focus on is this insane change in market sentiment, market structure, and the way that market participants are reacting to these different cryptocurrencies. I showed you Ethereum, for example, we'll get to a little bit later, has been performing quite well. And we've seen a shift in just the interest in the crypto space. 70% of Forbes magazine's 30 under 30 came from the cryptocurrency space, with 21 blockchain pioneers and innovators on the list, almost double the number from last year. So 70% of 30 under 30 is cryptocurrency related. Now, just having a look at what is going on with Bitcoin, yes, okay, we could do some consolidation. We could go down to 40,000, fine. But if you have a look at what is going on right now from data that was published by Glassnode Analytics, 97% of the Bitcoin supply currently comprises coins that have sat unspent on wallets for 3 months or more, and this strengthens the notion that many people are still sitting on their coins waiting for a future price uptick. Glassnode actually specifically said the implication is that hodler cohorts are exhibiting steady maturation behavior, and activity on chain is dominated by younger coins. Generally speaking, this demonstrates high conviction despite extreme volatility and losses. Quite the contrast to this week's price action. Now, can't even believe I'm giving this guy spotlight. Not a huge Peter Schiff fan, but I am a fan of what he does have to say when it comes to the Fed and inflation. I don't really appreciate how he's just a complete non-believer in Bitcoin, but let's be real. He's the gold guy, right? He kind of has to stick up for gold. He's kind of not really allowed to support Bitcoin, right? So he says, how long before investors realize that even if the Fed follows through with its inflation fighting plan to taper QE, which is why some people are, maybe the stocks aren't really moving right now. They're sort of waiting to see what happens, right? At the end of the day, today, he says that, it might raise interest rates slightly in 2022, that it'll be too little too late to derail this inflation juggernaut. If Powell doesn't get medieval, inflation will. In fact, you had Mike McGlone. Now, he's an analyst over at Bloomberg. He says $100,000 Bitcoin, $50 oil, $2,000 gold, 2022 outlook in 5 charts, peaking commodities and the declining yield on the Treasury long bond point to risk of reviving deflationary forces in 2022 with positive ramifications on Bitcoin and gold. And you can see right here, he's not specifically just talking about Bitcoin, but essentially what he is talking about is the fact that, if the Fed, continues to print, and although they say they're tapering, but how long is that really going to last? Well, it's probably most likely going to be very good for things like Bitcoin. Now, I know this is something that you already know, we've already spoke about, but you can see right here live on Twitter just a little bit ago, legislation to fast track process raising the debt ceiling heads to U.S. Senate. So they're having a meeting to basically discuss raising the debt ceiling. Like, how long can you just keep putting the Band-Aid on before it's going? I mean, how long do you really think this is going to work? Now, arguably, it could work forever, but come on, guys. People are losing their faith in the dollar. They're losing their faith in these fiat currencies, and they're kind of starting to lose faith in their governments, unless you're El Salvador and you're adopting the Bitcoin standard, right? And you have seen massive accumulation. I mean, Michael Saylor, again, they have purchased $82.4 million in cash at an average price of $57,000, accumulating an additional 1,434 Bitcoin. Now, we have spoke about what would happen if even just a small percentage of these traditional investors started coming into the space. Now, I want to start with this video from Cathie Wood. I know some people, Cathie Wood, she's back at it again, but I want you to listen to what she says. And the incredible thing about this interview is this is just the tip of the iceberg. Stick around after this, and I'm going to show you why it could get even crazier.
Let me ask you about crypto, which there's a piece out. I think maybe CNBC even talked to money managers, and that is ripe in 75% of those polled. That's ripe for a major correction or a major letting out of a lot of air in that sector. Does that sound like consensus, something to go the other way on to you, or not?
Well, yes, I believe it is. I think institutions are moving in. And right now, crypto of any sort, they're starting with Bitcoin and Ether. Crypto of any sort is a de minimis amount or percentage of institutional portfolios. The reason institutions are moving in is, to some extent, this is a new asset class with correlations very different compared to other asset classes. In fact, Yassine Almondra did a study on this and found that the closest, and we did it with Bitcoin, the closest correlation to other assets was real estate. And so institutional managers have to look at new asset classes that are evolving that have low correlations. That's the key to diversification, and it's the holy grail in terms of asset allocation. So we think that the move actually by institutions into Bitcoin, if we were to choose Bitcoin, and that seems to be their first stop, could add $500,000 to Bitcoin's price if they moved into the tune of roughly 5% over time.
So this is talking about 5%, roughly adding an additional $500,000 to the Bitcoin price, not to the market cap, obviously, that would not be very significant. We're talking to the actual price. So sitting at around, whatever we're sitting around today, let's just say $50,000 roughly, you're talking about a $550,000 Bitcoin. But get this isn't even the biggest kicker. Now, I had spoke to you guys about what Kevin O'Leary was talking about as far as some untapped funds, some untapped markets that have not even begun to allocate themselves to cryptocurrencies. Now, in Cathie Wood's example, she's speaking about some investors and institutions that have started dabbling in Bitcoin. So there is already that interest, there is already that allocation, but this is a completely untapped market worth multiple billions of dollars, and you have to hear it from the man's mouth himself.
So this isn't just like a Western Hemisphere earlier conversation, right? It's not just about the United States and Canada. I know that you've got a number of different friends, colleagues, and peers all throughout the Middle East, Europe. What are they all saying about this? Are they jumping in the game? Are they still a little bit hesitant? What's the international money doing?
It's very, very interesting. The topic that's going to be in Riyadh next week is about crypto, and there's a tremendous amount of excitement about it, but they have not pulled the trigger yet. They're trying to get themselves set up for the moment when the regulator allows it, both in their own geography and in the US. You got to remember that those funds, those sovereign funds, whether it be Saudi Arabia or United Arab Emirates, a huge amount of that capital is invested in the S&P 500 and derivatives thereof. Huge amounts, huge amounts. So they cannot be offside with the US regulator. They just can't. And I look at this as a huge opportunity. I speak to those guys almost every day. They would immediately go to 1% to 3% on Bitcoin alone, just Bitcoin, let alone Ethereum or any level 1, level 2s on the chain. They haven't even thought about that. They're just thinking about Bitcoin and owning that as an asset. The amount of capital that will come into this market when the regulator approves Bitcoin as an asset or a currency or a security, whatever they're going to, regulate it as, is going to be unbelievable, which is why I own it. I mean, my premise, stomaching the volatility, which we all do every 12-month cycle, is the upside is behemoth. It's huge. And so, whether it be, for me, it's an asset, it's a long-term hold. The coin I own, the coin is the coin I own. I don't trade it. I lend it. I stake it, and I get some income from that, but I'm never going to give up the coin.
With this international money, right? You talk about them wanting to go 1% to 3% just to Bitcoin. Maybe they would do some other stuff as well. Are we talking about just large family offices in the Middle East and Europe? Are we talking about foundations, sovereign wealth funds? And I'm trying to use that as a proxy for how serious the most conservative investors in the world are about this versus, oh no, this is a large family office where there's kind of one decision maker and they're going to end up making that decision based on how comfortable they are on a regulation standpoint and also a return standpoint.
Yeah. The real opportunity is not with the family offices or hedge funds that operate out of the Middle East. The real money is in the actual sovereign funds in both Saudi Arabia and the United Arab Emirates. It's billions and billions and billions of dollars. They have not allocated to crypto yet. When that happens, you'll see it reflected in the price of Bitcoin. There's no question about it. And they have such long-term views in those funds and the funds are so large. Remember, these countries don't operate the same way as the US domestic countries do, although they're managed. Many of the people managing those Middle Eastern funds, the sovereign funds, are actually Western educated managers. And so they generally abide by discipline and principles of risk diversification. So they may have a mandate, for example, that no stock can represent more than 5% of the fund or no sector more than 20%. Those are diversification mandates that are used all around the world, and they do that there too. But when you're dealing with a multi-billion-dollar mandate, and some of these they're the largest pools of capital in the world, a 1% allocation is a tremendous amount of money. And everybody is talking about not just Bitcoin anymore. It's what would a portfolio look like if, the managers are asking this of participants that are already building these portfolios. Give me an allocation of positions if I want to be exposed to Bitcoin itself, of course, but also be involved in decentralized finance and also own level 1 and level 2 chains. What does that look like?
By the way, I just want to give a shout out to Anthony Pompliano for having Kevin O'Leary on the channel. If you guys haven't followed Anthony Pompliano, he was like the original Bitcoin poster child. I've been following him for years. He's kind of like a beacon of light during those dark times, very Bitcoin focused, but generally appreciate his content. If you haven't checked out Anthony Pompliano, and obviously with his permission, I hope he's all right with me using this, but I feel like it is for educational purposes. Please make sure to check out his channel. Now, the other thing that we need to talk about is Bitcoin hash rate. Now, some people don't care about this. I care about this. And Bitcoin hash rate is officially sitting at the second highest level that it's ever sat in the existence of Bitcoin history. In fact, if I zoom out to the all-time, you know, this chart is looking quite parabolic right above me right here. But just having a look at the past, year alone, you could see that we are looking to break all-time highs. Miner confidence is rising. The miners are not selling at these levels. We're having Bitcoin get taken off of exchanges. We're seeing the potential interest from all of these sovereign wealth funds, on top of the fact that 97% of the hodlers are not selling their coins. Are you seeing what is happening here? Ignore the short-term price action. Like I said, my general prediction for the next low of the bear market is around $35,000. So considering the price that you're getting in at today, anything lower than the price that Bitcoin is sitting at today is an absolute steal. If Bitcoin falls any lower than it is today, these are buy the dip opportunities if you have that long-term mindset. If you're just trying to make a quick flip or you're day trading, well, then like I said, check out my tutorials on how to trade leverage, and you can trade these moves day to day if you want. But if you really want to just secure your position as a Bitcoin hodler, dollar cost averaging and long-term holding and buying these types of dips, these types of opportunities are absolutely incredible. We went over the other day how Bitcoin fell over 40%, whereas Ethereum only fell about 25% and is only down around 11% from the high, whereas Bitcoin is still sitting down 20%. Now, why is this happening? This is happening because the game has changed. It wasn't a clickbait title. It was reality, guys. It's not the same market that we had in the previous cycles. In fact, if we just come over here and have a look at money flow from Bitcoin in the last 24 hours, of course, we still have Tether taking up the majority. Okay, Tether, it has its place. That's how people, hedge against the volatility of Bitcoin. But if we come over here and we're looking at 1.36 billion for Tether, we're now seeing 492 for Ethereum, Binance, Matic Network being the third highest at 99.53. Litecoin, Binance, we have XRP, Cardano, Chainlink as well. And you can see down here, US dollar, euro, South Korean won, and Japanese yen aren't even having as much as what Ethereum and Binance are having together. So this is why I've been saying the game has absolutely changed. And the fact that Ethereum has actually broken out of this critical resistance that I told you guys about is potentially suggesting that not only is it different this time around, but also that we are seeing the strength of Ethereum separating itself, decoupling itself from Bitcoin. And we are also seeing, like you said, even Kevin O'Leary, who originally these guys were like, we're only touching Bitcoin. Now you're seeing them move into the other spaces as well. And with all of this untapped money, 500,000 added to the cap from Kathy Woods. And in the previous interview, if you actually checked it out, not the Anthony Pompliano one, but the one that Kevin O'Leary did before, he had estimated 700,000 to the cap. So I don't know if we should just combine that together and say maybe it's just 700,000 or 800,000, or if we actually take it separately and put it together, you're talking about Bitcoin hitting $1 million, which I have always said we will see in our lifetime, but maybe I'm even overshooting a bit. Maybe we'll see it even sooner than that. Maybe we'll be seeing $1 million Bitcoin in the next few years if the Fed continues with all of this money games that they keep playing and the interest keeps rising from all of these other institutions. So I still stand for Bitcoin. I do believe it is the best hedge, the best opportunity out there. And yes, although Ethereum, I do believe, is actually going to outpace Bitcoin this cycle, still, we do know that long-term bear cycles sometimes can be detrimental on the coins. We haven't really gone into a true bear market, so I can't really analyze it until we've gone through it, but I can tell you right now what we're having in this bullish cycle is that we're definitely seeing the decoupling, and we are seeing massive institutional interest, especially from these sovereign wealth funds, which have yet to even become allocated yet. The upside potential compared to the downside risk right now for buying Bitcoin is unbelievably in favor of the bulls. And on that note, guys, I'm going to leave you. Hope you guys appreciated this video. And I am going to start bringing you a little more altcoins as well, because look, I like to dabble in the altcoins too. Holding Bitcoin is fun, but I do like to trade some of these coins. I would love to share some of these opportunities with you if you'll let me. Obviously, I'm not looking to shill anything. I don't care if you buy it or not. Personally, doesn't matter to me, but I will share those opportunities as they arise, and I am keeping my eyes peeled. So thank you so much for coming back to the channel. You guys rock. I love you. I hope you have an amazing day today. There is a potential that I may not be able to make a video tomorrow, or it may come out at a weird time because I do have a bit of a busy day tomorrow, but I will try my best to do a weekend wrap up if I can, or the weekly wrap up on Friday. So thanks for coming back. Get subscribed if you haven't. Make sure you check out the free Telegram group. And as usual, if you haven't watched any of these videos right here, right now, what are you waiting for? Take your finger, click it. Until next time, stay crypto, and of course, peace out.
Bye.